Good afternoon. Welcome to BizTech Asia's Asian Midday Market Watch. It's the 7th of May. I'm Jeffrey Halley and my co-host today is Samantha Voon. And our guest today is Kian Soon, CEO of Astral Asset Management in Singapore. As ever, Kian Soon, welcome to the show.
Good afternoon. Happy to be back.
Before we get started, we'll take a look at markets around Asia and have a quick discussion about that. A bit of a mixed day today. Nikkei 225 in Japan is having a cracking session, up 1.21%. But in Shanghai, the Shanghai Composite is down just 0.08%, while the Hang Seng has retreated by 0.66%. Down in Australia, post the RBA rate decision, the ASX 200 is up 1.21%, but South Korea's Kospi is also having a Nikkei type day, rising 1.98%. In Singapore, the STI is having a quiet day, up just 0.08%, while Kuala Lumpur's KLSE is up 0.75%.
So, Kian Soon, what do you think of today's market?
I think following US handover last evening, which, the market starts to have some confidence that, Fed could cut rates, towards the end of the year. That triggered, very positive handovers. As you could see, Japan, Korean markets are typically rate sensitive. And positive news like, any form of rate cuts would, excites the market. And that's what we are seeing. The rest of the Asian markets are responding well. I think the exception is Hong Kong, which actually has a cracking month so far, and I think some kind of adjustments we are seeing this morning. Yeah.
Mm-hmm. I mean, since inflation is proving to be so very sticky, is the market prepared for no rate cuts?
I think the markets has been conditioned by Fed Jerome Powell from as many as 6 rate cuts to 3. And potentially we're talking about 1 or 2, and there are even whispers of no rate cuts because it's very dependent on the inflation data, which, as you mentioned, has proven to be very sticky. I think the market is responding to that, and as you could see, the kind of volatility or swings that we've seen earlier in the year is becoming lesser and lesser as the news managed by central banks are well coordinated, such that the message keeps coming, and I guess over the last few months there's more acceptance than resistance.
And I guess this isn't going to just be a US situation either. We saw Bank of Indonesia raising rates by 0.25%. The RBA has just come out about 30 minutes ago, holding rates steady, I think at about 4.35%. It seems to be that last little bit of inflation to get back to their targets is proving just harder to get out of the system than previously expected globally.
Absolutely, because I reckon that ultimately all the central banks have to be coordinated in a certain way and taking their bearings from US central banks, the Fed. At the same time, the Asian central banks have this challenge of making sure that the currency volatility is under control, as we have seen in the Japanese yen. And at the same time, if the economy is doing pretty okay, there's simply no rush to go into a rate reduction cycle.
Kian Soon, let's turn our attention to China. This has been fairly topical this week so far. They're back from holiday this week. The Kaizen PMIs yesterday were still remaining quite expansionary, well above 50, above 52 in fact. So I guess I'll ask you the same question. I'm probably going to be asking a few other guests over the next few weeks. Have we seen the worst for China, and are these green shoots, or is this perhaps a false dawn for China's recovery?
I guess that's the favorite questions for the market, given that what we have saw, in particular, how the Hong Kong market has rallied 7% in the month of April. And then in the month of May, even with the closing of the May 1st long weekends, we have seen a rally as high as 4.5%, and now there's a bit of pullback. So that gives a lot of excitement on what's really happening. whether the economic data are green shoots, or perhaps this is a flash in the pan. I think is for is I would say is the glass is either half full or half empty, depending on which side you're looking at. What is happening or what triggers the positive market performance? A couple of folds. Apart from the economic data, I think there are also positive news coming out of fiscal support from the Chinese government on certain sectors. And we know that those sectors are like real estate, and problematic sectors that really require some help. At the same time, we have also seen that the analysts from certain banks have, for the first time, right, in the past 18 months, come out to voice that the market has been oversold for Hong Kong and China, and it's time to actually relook into these markets, as their valuations are proving too attractive to be forgotten. So as a result of that, I think we are seeing the return of international investors, especially towards the end of April as well as early May. And this is quite apparent because we know that the Chinese markets were closed during the last 2 weeks.
Kian Soon, as ever, thanks for speaking to us today.
You're most welcome.
We've been speaking to Kian Soon, CEO of Astral Asset Management in Singapore, on BizTech's Asian Midday Market Watch. I'm Jeffrey Halley.
And I'm Samantha Voon.
And this show will be on our website, www.biztech.asia, as well as our social media platforms. You can also catch it with our syndication partners, TV stations, radio stations, and their websites. Thanks very much for tuning in today.